Hey, Tim. Deb's asked me a question about this mortgage calculator scam. So what's that all about?
Well, that started with a conversation with Kathleen, where she was quizzing me about what I thought about what's in the news right now, which is allegedly the government is suggesting they should start a 50-year term mortgage. She asked me what I thought about it. And typical me, my reaction was, oh, that's such a scam. It's enforced slavery. And it just puts people into financial slavery. It's just insane. I can see why it would happen because it's really good for the banks. And I just went off and had a tantrum about it. And she was like, well, what do you mean? And I said, well, okay. So first thing I think, or the way I look at it at least, is mortgages, full stop. Mortgages are a scam. And that seems like a radical thing to say, but I kind of then went into detail as to why mortgages are a scam in the first place. So what most people know, if they take the time to think about it, but they rarely do when they are getting their first house, is that mortgages are front end loaded. So when you first start paying a mortgage, you're mostly paying interest and very, very little goes to the principal, which means all you're doing for the first third of the mortgage, half of the mortgage, is just paying the bank for the privilege of having a mortgage. And it's only in the second half of the mortgage that you start paying it down. And people don't really think about this, and it's never pointed out. The facts are there, so you can't argue in a legal sense it's a scam, but it is a scam because any time something is hidden in the fine print and people's behavior doesn't take something like that into account, it's like a trap. So people are trapped into a mortgage that takes 30 years to pay off simply because they're not educated on how mortgages work and how they can get around that. So when you do some calculations, you realize a small amount of money can be put to use and it will have a completely disproportionate impact on the amount of interest somebody pays and the length of the mortgage. So for example, let's say hypothetically you have a $300,000 mortgage, which is fairly low average today. So if somebody has that and they just pay $200 of their mortgage extra, and they insist that it goes off the principal, that saves them $93,000. So almost $100,000.
But is that 200 a month, 200 a year?
So you just add 200 a month to your mortgage up front. And if you do that over the term of the mortgage, you reduce your mortgage by about 7 years. So it's paid off 7 years earlier on a 30-year mortgage. And you pay, think about it, almost $100,000 less you're paying the bank. And that's all you've got to do.
But how do you do that, though? Because do you just make a bigger payment? Do you have to do two separate payments?
Well, so each mortgage is going to be different in exact terms. But what people don't do is they don't realize that you can question this and you can learn, well, how does my mortgage work and what can I do? And with most mortgages, you can pay the principal. And I would argue that if you're thinking of taking out a mortgage and they don't give you that option, don't take it. You want that option so you get some extra cash, pay off your mortgage earlier. But it's this, the thing that the calculator does and is geared to doing is just showing the disproportionality of the impact. $200, $100,000. That's what people don't understand. Most people, if I quiz them, they say, yeah, I know it's front end loaded, but they don't realize that's what they're going to do. Even $50 off the mortgage. So I wish I didn't know this when I first bought a house. When we first bought a house, I didn't realize that was true. I heard the terms, yes, front end loaded, but I didn't really know what it meant or what the impact was. And the first two homes we bought, I think we've had about 7 homes over the years. Mm. The first 2 homes we bought, we just didn't really think about that or realize its impact. It's only on the third one that we really took it to heart. And we were able to pay it off in a dramatically short, in about 1/3 of the time, because we just put our cash to work for us in that way. So the banks aren't going to point this out. nobody's going to train the person taking out the mortgage, that this is true, because it's not in their interest to, because the banks make an incredible amount of money from people that take out mortgages. So that's why I think they're a scam. So it all started with that. And I thought, well, okay, well, maybe I can use AI to help me build a calculator that will be useful to people and just get them to understand that this is an option, whether they choose to do something about it or not. But at least, I think it makes sense to understand how it works. So in the calculator, somebody can put in their specific mortgage, what their interest rate is, because all the details make a difference. In the calculator, it starts with a default one, but you can alter it. So you put your interest rate in, you put your term of the mortgage, and you put your current monthly payment in, and it will show you if you pay a bit extra, and you can put in the amount that you think you could possibly pay extra, what impact would it have? But you need to make sure that you don't just pay extra. You make sure that the extra goes to the principal.
So basically, what you need to do is write 2 checks and actually write on in the memo field. One is the actual payment and one is this is going on the principal. Or if they take it out the bank, I presume you can then send a check once a month and say, put this on the principal.
Well, I mean, you're the expert on this. You understand this. You understand exactly how to do it. I think the exact mechanics you want to check with your mortgage company and ask, what's the right way to do this so it comes off the principal? But in principle, I think you're right that those are good ways of actually doing it in most cases. But I don't think you can assume that every mortgage terms and the way it works is going to be exactly the same. So you need to just, find out, I want to pay some extra off my mortgage. I want me possibly to pay my mortgage off earlier. Can I do that? And if so, what's the best way to do it? Should I write a separate check as you're suggesting? And just check for yourself. So everybody should check how their mortgage works. And this
there are actually some mortgages that do have a penalty if you pay it off early.
Don't take out that mortgage. Yeah. Shop around.
I've seen that. Yeah.
There's lots of different mortgage companies, and you can get quotes from different people that will, their terms are going to be different. So reading the fine print on a mortgage and making sure you can do that is critical. Because, just think about that. 7 years of your life, it's like slavery. Now, think about the context of, okay, a 50-year mortgage. Most people aren't going to understand this because if you check the terms on a 50-year mortgage, you're going to have the same ability, possibly, you need to check, but the mechanics would work the same. So you want to check, can I pay it off earlier? So for most people, though, they won't think about any of that, especially first-time buyers.
So, conversely, if you did get a 50-year mortgage, your payments would be much lower because obviously the longer the term, the lower your payment. But wouldn't that mean that you can pay it off quicker if you take what you would normally be paying for a mortgage payment on a 30-year mortgage? So the difference between a 30-year mortgage and a 50-year mortgage payment, but every month you put that on the principal, wouldn't it pay off even quicker?
That's a really good question. Use the calculator and it will tell you the answer to that. Don't assume anything, put the numbers in, and it will give you the math.
Oh, that's clever.
You then got to take that math and then apply it to your specific mortgage and then make sure that it will actually work. But in most cases, it's going to. The math works. You can also, let's say, for example, somebody is, say, 3 years into their mortgage, they can still use it in exactly the same way. They would just put in what the current balance of their amount of their loan is, and what their current payment is, and just what the current interest rate is. And then it will tell them from that point on how many years are left on the mortgage. So let's say it's a 30-year mortgage, so they got 27 years. So they would just put 27 years in there, and it works exactly the same. So it doesn't matter whether somebody's just about to take a mortgage out for the first time or they're partway through their mortgage. And if that mortgage doesn't allow them to do these things, remortgage. Yeah, for sure. So, I just think it's really for our kids, it's something that, I want them to be aware of and make sure that they understand the mechanics and the math involved. And it's just that's all the calculator does. It just solves that one problem. And I just think, don't let the banks make you a prisoner put a shackle on your ankle, chaining you to them, paying them for the privilege of having the mortgage, making their corporate profits bigger, turn it to your advantage. It's so easy to do. And you can vary it. I mean, you have to pay, you could pay $500 one month, $50 the next month, whatever you pay. As long as it goes to the principal, over time, it will have a disproportionate impact for sure.
Clever.